With the nation's household loans now believed to stand at around $1.1 trillion, the financial authorities are urging banks to step up their risk monitoring. But at the same time, the authorities are planning to strengthen support for small-scale finance for low-income families and working people. The chief of the Financial Services Commission, Yim Jong-ryong, said Thursday that an across-the-board rise in interest rates would only add to the burden of these groups. Hyo-sun reports.
The Korean government will reinforce support for small loan financing for the low-income bracket, while vitalizing lower interest rate loans targeted for the nation's working class. Yim Jong-ryong, head of the Finance Services Commission, stated at a meeting on Thursday that an interest rate hike will only add burden on the household debt.
An actual interest rate increase will not only be burdensome to household debt management, but it will also enhance the pain on the vulnerable and working classes.
At the meeting held to discuss strengthening support for the working class, Im promised to lay out additional measures to help the many groups of people who are yet to see benefits from the current policies, including the youth and single-parent families. Such measure comes as the household debts grew $48.1 billion this year, recording an 8.9% jump in October on year, and hovering around 1.3 quadrillion won, or about $1.1 trillion. Against this backdrop, Governor Jin Ung-sup of the Financial Supervisory Service urged private banks to stay alert and closely monitor domestic household lending. Meeting with 14 heads of private banks, Jin asked to focus on risk management as uncertainty is in the horizon for the financial and real estate markets next year. Kim Hyo-sun, Arirang News.